Today in crypto. Bitcoin, BTC, trading volumes on global payment service provider PayPal, Nasdaq PIP, reached $145.60 million on October 20, just as the benchmark crypto rallied toward its record high near $67,000. The latest spike in volumes came out to be the highest since the May 19 Bitcoin price crash from around $43,500 to as low as $30,000 on the day. Some $304 million worth of BTC changed hands, almost double the volumes logged on October 20. Continue reading on Cointelegraph. Bitcoin, BTC, stayed closer to $60,000 on October 22 after the largest altcoin, Ether, ETH, failed to cement new all-time highs. Data from Cointelegraph Markets Pro and TradingView ETH/USD just matched its record $4,380 on Bitstamp before seeing a harsh rejection. Continue reading on Cointelegraph. Whipsaw price action has returned to the cryptocurrency market after Bitcoin's, BTC, price lost steam at $67,100 and retracted to the $62,000 level. An early morning 87% flash crash in the price of BTC at Binance US saw the price briefly touch $8,200 and it may have set the market on edge, but generally, it appears to have been an isolated event. Data from Cointelegraph Markets Pro and TradingView show that bears have briefly taken control of the market with the price now fluctuating between $62,000 to $63,500. Continue reading on Cointelegraph. Wally Adeyemo, the Deputy Secretary of the United States Department of the Treasury, said the department would likely be enforcing more sanctions on companies involved in illicit transactions related to ransomware payments. Speaking at an online event hosted by the Center for a New American Security with former Treasury Secretary Jack Lew and Ambassador Paula Dobriansky, Adeyemo said the U.S. government would likely be dipping into its toolbox by employing sanctions when criminals threaten national security interests. He specifically mentioned crypto exchanges or mixers that are fundamentally in the business of furthering cyber criminals as possible targets. Continue reading on Cointelegraph. Bitcoin has dropped 3.8% in the 24-hour chart as the chairman of the U.S. Federal Reserve Jerome Powell gave a speech on the current economic outlook. As of press time, the crypto market has negatively reacted to Powell's statements as the intuition finally hints at a possible start of tapering. Related reading. Mathematical artist Nelson Sayers embodied the apparent general sentiment of mistrust towards the U.S. Fed with its latest piece, an inflatable Bitcoin rat place on the institution's building in New York. The work tries to convey the damage the Fed's reputation has taken over the years. The Fed chair has tried to take on new measures to stop similar actions in the future, but the dam seems too great to fix in the short term. Ryan Selkis, founder at crypto research firm Messari, commented the following on Powell's inflation statements and the institution's overall performance: the lack of trust, inflation expectations, and a possible start of tapering are creating a strong cocktail, as Bitcoin trends downwards in lower time frames. Although inflation is key, the injection of liquidity into global markets by the Fed via its purchases of assets program has given the crypto and traditional market a great boost. Related reading. An increase in leverage for the futures sector, as seen below. The aggregated open interest, OI, for the Bitcoin futures surpassed 400,000 BTC notional, the firm claimed. This metric stands very close to its previous all-time high and is accompanied by a spike in the funding rates for BTC perpetual contracts, but very far from its April levels, right before Bitcoin crashed. QCP Capital added the following on the possibility of BTC's price resuming its rally. Hit the like button and subscribe to the channel.